Good morning, trading world. I guess I'd like to begin this morning. The whole purpose of this video this morning, outside of the pre-market outlook, is to address the pre-market outlook, or kind of just alert video that I did yesterday, pre-market. And if this was a pre-market outlook video, the title of this pre-market would be "Sometimes It's Better to Be Early to the Party Bus Rather Than Meet at the Destination." I know, y'all seen the party bus and how fun it's supposed to be to, on the way to the party. Sometimes you have more fun on the way to the party than you do at the actual club on the party bus. So the market is kind of setting up to be that way. And the reason it's more fun on the way is because if you miss the onload on the party bus, you're going to miss the biggest part of the party. And that's simply because the way things are shaping up, a lot of things could happen after hours where you may not be able to take advantage of things. And even if it does coincide, or if it does spill over into the active trading hours, you're looking at an event that may have already passed. So volatility may be on its way back down during the time that you were able to jump in and take advantage of it. And I like to circumvent that by trading options on futures during certain events or certain things where they're pre-market events, like data drops, like the CPI, like PPI, things like that, jobs, the jobless claims, or what have you. But to get into yesterday's video, it was a little abnormal or off kilter for me. I didn't think I was sounding the doom and gloom alarm just yet. We still have a while to go before we reach that point. Those that have followed me or followed my pre-market outlooks for a while know I usually give 3 scenarios ranked by probability. I apologize for not delivering the pre-market outlook without its regular structure, but it's been a while since I've posted, and I'm not quite prepared to put them together in a timely manner just yet on this PC. Now, again, to address the cracks in the market getting too big to ignore, I want you to take a second to think of the recession, or think of a recession, as if it was an earthquake, a 8.0 magnitude or above on the Richter scale earthquake. There are usually warning signs, some harder to recognize than others. Some of those warning signs are tremors, basically smaller earthquakes. Some tremors may be very small, not even getting above 1 on the magnitude or Richter scale. However, it is still a warning sign to look for further activity coming down the line. Now again, I didn't mean to ring the doom and gloom alarm, but based on my technical market timing, I am expecting a decline, or market flush, or whatever you want to call it, to begin in the next 3 to 5 days. Then we try to resume the uptrend, or in my opinion, grind more sideways than up over the next couple of months. I'm not calling for a recession right now, just more of a tremor to let us know something else is coming down the line. That tremor looks more like a day or two totaling 3 to 7% down, maybe a little more. A lot of questions arose. What if it didn't? Based on what I said yesterday, a lot of questions arose. What if the market didn't close down on Thursday? And it brings a few scenarios to mind. And since we now know that the market closed higher on Thursday instead of lower, it's possible for the bulk of things to happen after hours. And it's even possible that Tuesday we could wake up with a huge gap down. But let me go back and think about the first scenario. The first scenario is, given that we have housing starts and PPI coming out this morning, we could start the day off, or actually start the morning off, with the nice drop down upon the release of these reports, either getting to a point middle of the day where we get a V spike reversal to kind of close it out, and if there's any spillover into next week, we get a little rescue from the overseas markets that kind of keep it from becoming a run or later on in the week. The second is pretty much the second scenario would be, again, waking up Tuesday to a huge gap down. And that gap down kind of may trip some market circuit breakers. We may have to stop the market from trading, which happens, I have to go back and read, but I think it's either at 3%, the first break comes on and stops the market for trading for 15 minutes or 30 minutes. I have to look it up to be exact. Excuse me. I'm sorry. The circuit breakers, it's at 7%. The level 1 is pretty much a decline of 7%. And at that point, trading will be halted for 15 minutes unless that 7% decline from the previous day's close happens after 3:25 p.m. Eastern Standard Time. In that case, they let it run till market close. The next level is a 13% drop, which is next level 2, which is basically the same, triggers another close or halt of trading for 15 minutes. And then the level 3, which is 13%, this halts trading for the rest of the trading day. So that's a refresher on the circuit breakers on the market. But like I said, the scenarios that come to mind, back to number 2, is that Tuesday we wake up with that huge gap down, and even though we wake up with a huge gap down, for me, that won't be the time to just jump in and join the party down, because if we're down enough, 2 things are going to happen. 1, we hit a circuit breaker. 2, because of the gap, the market makers, they're going to try to close the gap or repair the gap. So we're going to start up just like the structure that I talk about on trend days, where we try to close a gap, even though we may not get to that point where we completely close the gap, but there's going to be an effort made to try and close the gap, and you have to wait for that before you try to jump on and join the ride down. Because if you try to join the ride down, something for anybody who's been trading in the market any length of time, everyone knows not to short in the hole, because it could blow up in your face. And so that's going to be one of those moments that you have to kind of sit on your hands, and no matter how bad it looks, don't jump on the pile at that moment. Give it time to try to repair itself, and follow the your indicators at that moment to watch for that rise and fall again. So that's scenario number 2. And then scenario number 3 would pretty much be, we extend this thing over into next week, and it doesn't actually start until and actually the date that I had on my analysis is actually the 19th. So if it starts on the 19th, we get that hint of the tremor, or it starts then, but it spills throughout the week to where we get the down day, we may hit a circuit breaker, stop trading, and then things may appear fine or on the mend for Tuesday and, well, for Wednesday, and then somewhere in the middle of Thursday it breaks loose to the downside again, and this spills over into early or midday Friday. And it's likely to spill over into next week when you look at the calendar and you look at the events, not even looking at earnings, but just the data drops, the CPI, the jobless claims, even the overseas data drops, the ECB minutes, retail sales. There's so many things that could kind of trigger something to happen next week to where this could kind of wait and get underway next week. So last, I want to kind of, I hate to do this and not leave you with some type of levels to look for. So let me bring up a a few key levels here. All right, and excuse me, we just hit 8:30, and the reports are out, and it looks like we're starting on that downward move. And this is why today's title would have been better to be early to the party bus than to meet at the destination. It doesn't mean that we're going to go all the way down and try to eat up that 3 to 7% today. It still could mean we could be in the move for the majority of it to happen next week. But I kind of had some key levels that I had marked for resistance. The first level of resistance was the 50-58 level, which was right about here, that 50-58 level. And then also, if we do recover from this, which is quite possible, it's going to take a while, but end of the day, we could be aiming for the 50-80 level, which is up here, and then quite possibly the 5110 area up there. Now, the rest area, rest and reversals, when the market is trading like this, I don't really like to look for specific support levels, but I'm going to try to obtain some rest areas for these are areas where the market is going to kind of take a break from that strong momentum down, and you're going to see some sideways trade, which may lead to a reversal. Not necessarily, but this is the start at which a reversal can happen. So that's going to be the 50-26 area, which we're going to look at right about here. 50-26 area, and then the 50-11 area, which we'll say it's right about here. And if we're really going for it today, it could put us down near the 49.70, 49.60, we'll say 64 area, but we'll say if we're really going for it, we can wind up way down here. I don't really see that happening today. This is something that would really take to spill over into next week, but these are kind of like the tremors letting me know that the bigger tremor is coming. When I start to see bigger candles spill like this on shorter time frames, it just lets me know something that's in the works happening. But let me label this the 50-58 area. 50-58 was that first level of resistance. The next one was 50-80. And then the all-out target to the top is going to be 5110. And that first rest area for the downside was 5026. And The next risk area to the downside was 50.11. And 50.11. And again, I said I don't really like to try to depend on specific levels. I more so would watch the change in the AD line, because it's going to start improving way before the price action shows improvement. And then once we get that improvement in the AD line, then you can kind of try to pin to levels. But until there's improvement in the AD line, it's useless to depend on pinned support levels in this type of a market. So that's pretty much what I wanted to clear out of the way, and this is exactly what I was trying to prevent, being that I'm not quite set up again to do pre-market. It takes a lot of time out of the preparation in my day for my trading, to where I kind of get discombobulated. I don't get to preset all the things that I need to do in my own trading sometimes when I try to format the pre-market and get it out. It takes a lot of time to put the information in a neat form so that I can present it properly. But I'm going to look at some things. Hopefully I can improve on that this year once I start back. I'm always open to suggestions. I'm even thinking about doing some live trading or trade with me webinars live this year, but it has to make sense. But again, I'm open to suggestions. If you have any suggestions, please comment, or I think you can still private comment, or you can leave comments on the Reddit page or the website, which should be below in the comments. But again, as I always say, just hoping to help prepare you for a profitable day of trading. Hoping to keep you from going through those grueling early years that I had, of frustrating years trying to learn my way through this and figure my way out through this. So if anything I shared has helped at all, I feel I've done my job. So again, be safe out there, because the volatility is jumping. It's going to jump even more in the coming days. So this is a time to buckle up, be safe. Make sure you cut back size if you're not at all sure of exactly what you're doing, because this is not the time to experiment. So be very, very careful. Again, always wishing you a profitable day of trading. Hope you have a great one. Be safe.